Good evening, all. This is Shay Horowitz, SugarTrading.com. This is our free weekly newsletter. I want to talk a little bit about market conditions and market stages. Market always goes through three different stages. The first one is trend. That's when the market is really moving. After a trend, the market goes through a noise, and then it'll go through a consolidation, and then it'll start a trend again. And this is a chart of the S&P 500. And you can see how we have a nice trend, and then we have noise, and eventually it becomes a consolidation and becomes a trend. Noise, then becomes a consolidation, and then we have a trend. And then noise, consolidation, and then we have a trend. And you can see them basically all over the place. And then trend, and trend. You can see how the market will go through the stages. Well, that's basically where we're at right now. We are in a noise stage right now. If I zoom into it, you can see that we just came out of a very, very nice trend where we were just, it was easy to make money, very easy to make money. And now we are in a noise. We're not really forming consolidation quite yet. It's not very clear quite yet. But once we have that consolidation, we'll go for another trend. And that's when we'll make the most amount of money. Let me show you the same thing on the NASDAQ. This is the NDX, NASDAQ 100, top 100 stocks in the NASDAQ. Ignore all the horizontal lines, those are all support resistance levels that we've been talking about for quite a while. You can see a trend, noise, consolidation, very nice trend, noise, consolidation, very nice trend. There's the noise, there's your consolidation, there's the trend, and look what we're doing here right now. Let me zoom in, and this is encouraging to me. We are forming a wedge-shaped consolidation. And pretty soon, when we get closer to the pinnacle of it, the market will break out on a nice trend. Either way. Which way? I'm not quite sure yet. But the trend right now is to the downside. You can still see all the moving averages. The red line, which is the 200-day moving average, pointing down. The blue one, the 50-day moving average, pointing down. And the yellow, which is the 21, pointing down. You can see how the 21, for example, has to turn before we actually pick a direction. As you can see that it started turning over here before we actually started picking a direction. We're not quite there yet. It hasn't quite turned yet. So we're still in a downtrend, and it still looks pretty strong possibility we'll go down again. Now, the last week, I want to talk a little bit about the last week. Let me put this on a 15-minute chart so we can see 21st, 22nd, 23rd, 24th, 25th, and 28th. You can see what happened last week. And last week was a very difficult time to trade, and that's because it's in the noise stage. And you can see how on Monday everything was, we gapped up, we came down, no problem. And then on Tuesday we had a very, very large gap down, which got all the shorts very, very excited because we're going down. Consolidated most of the day, and then towards the close, boom, started going straight up. And then on Wednesday it came down, and then for the next few days it just had noise. But that's about it, not a whole lot. I want to show you the source of all this noise, and this is the important part. This is Fannie Mae. Fannie Mae on Monday gapped up, and this is a $14 stock that gaps up and goes all the way up to 18 level, comes down the same day all the way down to 14. The next day it gaps down all the way down to 12, consolidates most of the day. On Wednesday it gaps up all the way up to 16, and then has a strong downtrend with very large up gaps, by the way, all the way down to below 11. You're talking about an $18 stock going down to 10. That's 80% change in 1 week. That's a tremendous amount of change. Freddie Mac, sister, from 1050 down to 750, up to 1150, down to 8. Think percentages. Even worse. Washington Mutual, 650 down to 450. Up back over 6, down below 4, up back up to 4. Think percentages. These are humongous moves. Wachovia, 12, 19, back down to 14. Pacific Capital, 12, up to 19, back down to 12. Merrill Lynch, 29, up to 36, back down to 27. RF, 11, gaps down all the way down to the $8 level, and then rallies straight up all the way up to 13. By the way, this was great day trading. I mean, we made a ton of money on RF in our day trading chat room. But from a swing trading standpoint, it's very, very difficult because, to risk this much money, forget about the profit from a swing trading point. Think about the risk that you're assuming if you're trading banks right now, where you are holding a position at 10 and then the next day it gaps down to 8. That's why we stayed away from swing trading most of the week last week because of this. We were focused on protecting capital and not on capital appreciation. Remember that capital preservation is more important than capital appreciation. And sometimes when the market is in noise stage, you have to protect your capital. Otherwise, you absolutely get demolished. One more. Capstone Mortgage. From 12 up to 1240, down to 11. Not a whole lot, but you can see it's a lot of noise. I want to look at a different sector. This is the transportation, YRCW, all the way from 18 up to 22, that back down to 17, all based on gas prices and in our economy, basically because transportation is a reflection of how our economy is doing. UAUA, from 5 all the way up to 10, all the way back down to 7. This is great for day trading. One more. Auto Nation, 850, all the way up to 11, all the way down to 950. And NWA, Northwest Airlines, another one I wanted to show you, was 8 up to 1050, back down to 8. Now, the reason why I'm showing you all these stocks is because my point is, you have to look at individual sectors, and that's what mattered last week. It was all about earnings of these specific sectors. It's all about news. It's all about the FDIC coming in and closing down banks. They just closed 2 more banks over the weekend. 2 banks out of Nevada, I think, that closed down. IndyMac was last week or 2 weeks ago. A tremendous amount of news. Fannie Mae, Freddie Mac getting saved by the feds. They actually, there's going to be big news about the housing this week. Quite a bit going on, and that's why the market is volatile. My encouragement to you is to look at what's going to happen next. Realize that we are in a consolidation. We are in a noise consolidation. This is an hourly chart of the NDX. You can see what I mean. If you're trying to buy, if you're trying to swing trade, if you're trying to ride trends, this is what you've experienced. 1866 and about 1800 with a nice consolidation right here. Looks like we're going to break to the upside on a very short-term basis, but this is still something we're going to have to see. My plan, trading-wise, is to keep day trading and enjoying these. I want to preserve capital. I'm looking for the market itself to continue consolidating. And whenever I think that it's about to break out, I'll be releasing quite a few trades, either on the long side or on the short side. Depends on which way I think the market is going to break out. Whenever the market breaks out, our plan is to ride the next trend. And that's when we make the most amount of money. The market is not always trending, but when it is trending, the money is much, much easier. Anyway, have a great week. Don't forget to preserve your capital. Stay away from volatility. Watch earnings and enjoy. Take care.